Today I'm taking a look at BAE Systems. This is very much a defence business, working across a wide variety of sectors and exporting product right around the world. So let's have a little look into them and see what BAE is all about. So best known at the moment for their work on the F-35 jet and other future jet technologies. So a little scroll through the website. Yeah. But they're also involved in quite a lot of other areas of defence as well. It's individual protection, weapon systems, munitions, explosives, gun systems and artillery systems, electronic warfare and blocking of radio frequency threats. And there's the air systems, optical display and targeting, research and design, testing, and they're doing work on air, land and sea as well. So we'll have a look at their work with the Royal Navy. So we design, manufacture and support complex surface ships. We design, manage and support surface ships, submarines, torpedoes, radars and command and combat systems. We also provide ship repair, maintenance and upgrade services and a supply of naval gun systems, as well as a provider of commercial shipbuilding. The amphibious build vehicles in there as well, boats, upgrade and maintenance. So let's take a look at the figures, give us some sort of indication of what's going on. So the turnover has been growing nice and steadily, and even over a Rona period that seems to have held up quite significantly. Gross profit again climbing steadily. It's a bit of a drop down in 2021, but the net profit seems to have remained quite consistent, if not on a slight growth trail there. Assets versus liabilities. We're looking at quite a fair bit of debt there, although the asset base is growing. The debt base may be slightly declining over the last year or so, but still fairly high as a ratio there. Come back up to free cash flow. Free cash flow is actually looking quite healthy there, and a very good year in 2021. That may well be as a result of the factors that you're going to show underneath. Down there we go to capex. And capital expenditure in the last couple of years has been a lower figure than it has been back in 2017. So it may be, well, things change in the economy, the capital expenditure may start to regrow again, but it's all looking quite positive and very consistent sort of business. So we'll go to SharePad and have a look what's been happening in the last couple of years. Bit of an up and down, bit of a drop down with Rona there, and a steady climb, and obviously with news in fairly local parts of the world, like Ukraine, then the share price has been starting to climb quite healthily, as maybe the expectation of quite a flood of orders going to be coming their way. So in terms of simply Wall Street, they're putting the fair value at 872, current price at 746 a share. So there may be that bit of upside there. I think there's so many different ways of working out fair value on a company that the figures do tend to vary, but with BAE being more consistent to business, it should be more easy to work out a free cash flow fair value or DCF calculation. So assuming a WACC at 6.38%, coming out with a figure about 19.61 a share, so a long way adrift of what simply Wall Street have got from their route of calculation. If I put in a 15% investor's return on the WACC as the discount rate, let's see what that then revises the figures to. That's a £6.54 a share, current price 7.23. So 50% on that would be 3.27. I think the chances of getting down to 3.27 in the current climate may be a little bit remote. But we'll go back to SharePad there. The lowest figure we're showing in the last couple of years or so is there at £4 a share, just under, as it's very much its lowest figure. So that probably would have been the bargain point to buy them. And if you bought a couple of years ago, you'd now be showing a very, very healthy return on your investment. So look forward to seeing your comments on BAE Systems in the comment boxes below, and we'll catch up with you again soon.